Mortgage rates will fluctuate on a daily basis based on market conditions. Sometimes they'll fluctuate 2 or 3 times throughout the day in a very volatile market. What you need to understand is that at one point from application through closing, you're going to have the ability to lock in that interest rate to make sure it doesn't move on you throughout the process and after closing. You also need to understand that when you go to lock in the rate, you'll have the opportunity to pay what's called points to buy that market rate down, specifically discount points. So what are points and are they worth paying is a question I get all the time. So let's take a look at an example. Points to start are a percentage of your loan amount. 1 point would be 1% of your loan amount, 2 points would be 2% of your loan amount, half a point would be 0.5% of your loan amount. And it's a one-time fee at closing that you will use to permanently buy down the market rate. So let's take a look at an example. Let's say you were borrowing $400,000 and the interest rate at the time you wanted to lock in was 6% with 0 points. 30-year fixed rate at 6%, 0 points. That means if you lock that rate in, you would pay the markets nothing to get 6%. Maybe you said, you know what, I want a slightly lower rate because I want a slightly lower payment. I'm willing to buy that rate down to 5 3/4. And if the market said that would cost you 1 point, in this example, 1% of $400,000 would be $4,000. You would pay a one-time fee of $4,000 to drop your rate from 6 to 5 3/4. Now, what does that do to your payment? It reduces it by about $64 a month. So the million-dollar question is it worth it to spend $4,000 today to save $64 a month? Well, just looking at the pure math, you would take $4,000, divide it by the monthly payment savings, and it would take you about 62 months or just over 5 years to make your $4,000 back. Is it worth it to spend $4,000 today to benefit 5 years from now? It depends. If you told me you weren't going to stay in the property more than 5 years, then I would probably suggest that you don't pay any points. If you think rates are going to come down over the next 2 or 3 years, then again, you may want to refinance, in which case you wouldn't want to pay any points at closing. It's a personal decision that you and your lending representative should talk about at application and when you're ready to lock, and look at all the options with and without points so you can make a decision that's right for you.